So if you have money in the bank, today we have something very important to talk about because I'll be providing information on the latest bank collapse and how it impacts you as a person. So regardless of your country of residence, whether it's the US, the UK, Kenya, Nigeria, Canada, wherever you are, this topic is important. So make sure you watch this video till the very end. So there are some bank failures that recently happened.
Silicon Valley Bank, the nation's 16th largest bank, was shut down by the FDIC on Friday.
U.S. banks have lost over $100 billion in stock market value over the past 2 days.
In fact, the second largest bank failure in history. And in case you don't know what a bank failure is a situation where a bank is unable to meet its financial obligations to its depositors, creditors, or other stakeholders and is forced to cease operations. And this was exactly what happened to Silicon Valley Bank last week. Now, you probably have never heard of this bank because it really exists for the tech startup world, and it's also behind a lot of fintech products. Like your bank app is technically a fintech product, but it still affects you. And honestly, this can happen at any bank. So when you deposit your money in the bank doesn't just keep your money in a safe or in a room waiting for you to come get the money at any time. No. So what the bank does, the bank actually operates on what is called a fractional reserve banking system. And what this means is that when a customer comes and deposits money into the bank is only required to keep a certain amount of that deposit on reserve or in the bank. So let me explain this clearly so you can understand. So basically, if you deposit $100 in the bank and the reserve is set at 20, the bank is only required to keep $20 of the deposit on reserve. So what happens with the rest of the money is that they basically invest our money so that they can generate income to keep running. So how do they do this? They give out loans with our money and they make money through interest. And one of the ways that they give out loans is by investing in bonds, US Treasury bonds. So they do this because it's safe, right? Okay, now I'm sure some of you may be wondering, how is this even possible? Because whenever you go to the ATM to withdraw money, how are you always able to do this? Okay, well, so banks use different ways to make sure that they have enough money on hand to meet the demands of customers. So back to the story of the Silicon Valley Bank. So during the pandemic, bank experienced a significant increase in deposits, with this particular bank, that's the Silicon Valley Bank, receiving billions in deposits from the tech startup companies that banked with them. So the bank then invested $100 billion of these deposits into government-backed securities and bonds, so which are usually considered safe investments. But due to the recent interest rates increases by the Federal Reserve, the value of these investments started to decrease rapidly by like a lot. So this resulted in a significant loss of about $2 billion. So the bank had to sell some of their investment to pay customers who were withdrawing their deposit. And at this time, they were very desperate. And despite the bank's attempt to raise money from investors, they were unsuccessful. So when customers heard about this, they started running to the bank to withdraw their money, leading to a mass withdrawal of about $42 billion by customers a day. So this caused the bank to have a negative cash balance of about $958 million. So after all of that, they were unable to pay its obligations to customers and they had to shut their doors.
A line of about 50 people deep, waiting in the rain, trying to withdraw their money. They got no money.
And so it was placed in the hand of the FDIC. Now, you may be thinking that the customers of the banks were protected by FDIC Insurance, which covers up to $250,000 of deposits. But it actually turned out that, according to the Business Insider report, 88% of the bank deposits were uninsured, meaning the FDIC's insurance wouldn't have covered their losses. But thankfully, the FDIC stepped in and bailed out these customers by removing the insurance limits and giving them back their money. But this may not always be the case, guys. So protecting your hard-earned money is an essential aspect of managing your finances. And there are strategies you can actually use to safeguard your money in the bank. So the first step is to choose a bank with FDIC insurance. Now, the Federal Deposit Insurance Corporation, which is the FDIC, is an independent agency that provides insurance for deposits in banks and saving institutions. So the FDIC insures deposits up to $250,000 per depositor per account ownership category. Now, this means that if your bank fails, your deposit will be insured up to $250,000. So it's important to choose a bank that is FDIC insured to protect your deposits. So you can check if your bank is FDIC insured by visiting the FDIC's website or by just asking your bank directly by calling them. So if you already have your money in the bank, you can make sure it is insured by looking at the bottom of your bank statement. You should see something about the FDIC insurance. So before opening any bank account, I know there are many online banks out there. So it's important you always ask these questions. I know some people may consider this as common sense, but I mean, it's important to recognize that not everyone has received the same education, same financial education. And that's why I'm sharing this information. And that's why I'm breaking it down for you to understand. So that's why you should subscribe to this channel, because in this channel, I talk about everything: how to save money, how to make money, how to invest money. And I also talk about life in Canada and how to relocate to Canada. So if you're interested in this kind of content, please hit the subscription button and hit the like button and share to your friends and family. Hit the notification bell so that whenever I upload a video, you'll be the first to know. So the next strategy to safeguard your money in the bank is to diversify your deposits. So instead of keeping all your money in one account, you might want to spread it across multiple accounts or different banks. So by diversifying your deposit, you reduce the risk or exposure. Because in a case where one of your bank is compromised, or your bank fails, or it gets hacked, or security system just shuts the bank down, your risk is reduced. It's because even if you have FDIC insurance, in the event of a bank failure, it is still a time-consuming process, because you can't just contact your bank immediately to retrieve your money. No, it doesn't work that way. So having another account with accessible funds is beneficial, because you still have to pay those bills, guys. You still have to buy food. You still have to buy gas. Life still goes on. So that's why you don't want all your money in one place. And another thing is that it's always good to have cash on hand for emergencies such as natural disaster or power outages, when your ATM or other bank services may not be available. So in the event of a bank crisis or economic collapse, banks may freeze your money or limit your access to it. So having cash on hand can be a crucial backup plan. So another way to safeguard your money is to invest in different assets such as real estate or certain stocks, depending on how much money you have available. So spreading your money across various assets can help reduce the risk of losing all your funds in one area. So to recap: choose a bank with FDIC insurance, diversify your deposits, monitor your accounts regularly, use strong passwords and two-factor authentication, avoid public Wi-Fi networks, and be cautious of phishing scams. So with all these strategies, at least you can keep your money safe and secure in the bank, because crazy things are happening out there, guys. So it's important for you to stay informed, and that's one of the reasons why I'm here. I'm going to keep my eyes glued to see how this affects the rest of the financial world, to make sure that you and every other person in this fabulous family is safe. Okay, because we don't want anybody messing with our hard-earned money. So as soon as I hear anything new, as soon as I read anything new, I'm coming straight to this channel to share with you. So if you haven't subscribed to this channel, you should subscribe to this channel right now. Hit the subscription button, hit the like button, share, and leave a comment, and let me know what you know about this recent collapse. So remember, guys, learning is power and knowledge is wealth. So until the next time, peace out.